Happy Friday, traders. So I'm going to offer up a new trade here, one of my favorite trades, which is the butterfly trade. In this case, it's going to be an iron butterfly. And this is going to be one of the trades in the start to finish series. So now I'm modeling this in a 10 lot, and I'm going to show you, excuse me, my selection process as to how I kind of take a look at these and how I select what I want to trade. Again, I'm always recommending paper trading. And also, before I get too much further, please, in the comments down below, leave a note, leave a message, make sure you like and subscribe. That really helps a lot. It shows me, what content people are liking so that I know to create more of that specific content. And also, I can certainly try to answer some questions in there as well. But let me, first of all, take a look at our markets. So let me get back. Here we go. So if we look at our markets, you look at the Q. So we broke out here. We broke out with some significant volume. So that's kind of a, I guess people would consider that sort of a solid breakout. SPY, similar, not quite as much volume behind SPY. And then IWM, those would be the three main indexes that I'm kind of looking at here. And IWM popped up and now selling off just a little bit. So again, those are kind of the three indexes that I wanted to take a look at and do a butterfly in them. So the reason for the butterfly is that I feel like we might be at a little bit of a stalling place, or even a place where we might back up just a little bit. I don't think our markets are going to tank at this point because they're showing significant amounts of strength, but I think they might have run to a point where they might stall a little bit. And I've been thinking that for a while now, and obviously that hasn't happened, but I'm going to show you how we're going to deal with that. So the first thing I want everybody to notice is I am doing a 10 lot of these. Again, you'll see why in just a moment. I'm choosing a 10 lot, and I'm going out to the 4th, which is a 22-day to expiration. We're going to look at the IWM, we're going to look at the SPY, and we're going to look at the QQQs. So what specifically am I going to look at? Let me move this to a 10 lot because it's not currently a 10 lot. So what specifically am I going to look at on this? Well, the thing I really want to pay attention to right now while we're deciding which one of these is I want to look at the reward to risk ratio. So in this case, with a 10 lot, I have $1,300 in risk, and I'm looking at a maximum reward of about $3,700. Let me look at SPY. So with SPY, I have an $860 in risk. Now, these are all $5 wings. So I've got an $860 risk, and I have a maximum potential gain of $4,100. Now, keep in mind, we are not shooting for that maximum gain. I want to be very clear on that. But it is something I use to kind of measure the reward to risk ratio on the trade. And then we'll take a look at the Qs and kind of see how the Qs stack up here. So when we go to the Qs, we're looking at a maximum risk of 630, maximum reward of 4360. So another way we can look at these, we can come down right here, and the math will be done for us in Option Strat. We can look at percent of max risk, and we can see the percent of the max risk here is almost 700%. So that's the amount that we're risking to the amount of the potential reward. Again, we're not shooting for that reward. It's highly unlikely. I mean, you would have to peg that exact price on expiration day. I'm never around when that happens. Or if I am, I've worked this trade into a trade that is a no-lose trade, and maybe I'll leave one of my 10 on there for that last day just to see what might happen. But anyhow, so we can see in the Qs here, we're looking at about 700. Let's come back to the SPY. And in the SPY, let's change that to percent of max profit. And we're looking at about 500. Then we come to the IWM and change that to percent of max profit, and we are looking at about 280%. So now I understand a case can be made here that IWM is trading at about half of what SPY is. It doesn't move as much, so a case could be made that, well, gee, you need to, if you're going to compare apples to apples, maybe you need to widen this out further, and you need to go 10-point wings. And so let's just see what that looks like. So if you went to 10-point wings, you're a little closer here, maybe, but you still have a lot more risk in play. And actually, it's gotten worse. So this is not, from my perspective, this is what I like to do when I'm contemplating, do I make a trade in product A or product B? As I like to look at where my risk-reward ratio is best, particularly in butterflies, which again is kind of my main trading tool. That's what I like to trade. Now, let's take a look at one other piece of this puzzle. I told you there was a reason I'm doing this in a 10 lot. So let's focus on the Qs, because that gave us the best risk-reward ratio. So the risk-reward ratio in the Qs, remember, we're risking, let me change this back to dollar amounts. We're risking about $600 with the reward at about $4,300. And again, that was about a 700% reward to risk ratio. So really, really good from my perspective. So now, let's take a look at our T0 line. Remember, that's this line right here that decays over time. What I like about this is this line is pretty dang flat, and it stays pretty flat for 10, 12, 15 days into this trade. I'm out by this point. I will have hit well over 10%. I mean, that's at 50% here. So this trade has a nice flat, what we call T+0 line. The market can move quite a bit in either direction without my position taking much heat. But this is a slightly negative delta position. If we come up here and we look at our Greeks, we'll see that we're a little bit negative delta. So if the market does rip up, this position will actually lose a little bit. You can see if our market goes from 380 up to 386, we're going to be down about $131. So if we're thinking that, yeah, the market's kind of stabilized here, but it could shoot up a ways, how might I protect against that if I wanted to, if I needed to? And again, I'm not saying I should. I'm actually going to enter this trade without adding this upside protection. But if I wanted to, I could come in and I could buy a call, and I could buy a call at some point in the future that would offset that delta. And I am not going to buy 10 of these. In this case, I have to unlink these legs, otherwise it's going to change all of my other ones. I'm only going to buy a single one of these. And when I do that, depending on where I place this, we can see right now I'm still negative delta, so I might need to bring that a little bit closer. So if I wanted my delta neutral, maybe I buy that 404 long call, somewhere in that general range. So what that does for me now is it kind of flattens out my upside. Remember before when we got up around 386, we were down some money? Well, here we're not down some money. We're still up some money in this case. But I also have to keep in mind that this call is out of the money quite a ways, so it will be decaying. I'm going to narrow my range here now and see that long call is all the way out here. So if we get out here close to expiration, that long call is not going to help me much because it will have decayed quite a bit at that point. So in the ideal world, if I needed to add a long call, I might want to add it in a little bit closer in here somewhere. Then this valley of death is not going to be as prominent. But now all of a sudden I've got 24 positive delta. Well, I don't want 24 positive delta. So it's a balancing act of how do you balance this whole thing out and get what you want out of it. In this particular case, my game plan here is because we are so relatively flat. Let me widen this back out here. because our T0 is so relatively flat here in this QQQ trade, my plan is to just go ahead and enter it this way, knowing that it carries a slight amount of negative delta. Now, one other possibility I could do is, rather than this being 10, I could take this up to a higher number. Let's just say I take this, oh, let's see, I've got those all unlinked, and now I need to relink that. So I could take this all the way up to 20, or let me even just get crazy here and go to 25. We can see now we've got a negative 12 delta when we do 25 of these. So if I wanted to flatten that out, I could come up here and include this call, and now we're essentially flat delta at a 402. And again, our goal here is to go out, look in the future, and see, is this going to suffer from significant decay? Is that valley of death going to get large on this? And because we're so close in, it does not get impacted quite as much. Now let me, right there is where it finally kicks into place. So it's just a shorter distance, and that decay won't happen as quickly. So again, my goal here right now on this trade, though, is I'm going to enter it as a 10 lot. And let's just take this back down to 10. Oop. Yeah, let's see. That's interesting. I never knew it did that it rolled in larger increments like that. That's actually a nice feature. So I'm going to do a 10 lot. I am not going to include this right now. And I'm going to see if we stay, right in that general range and decay, or if we maybe even pull back a little bit somewhere in here, because again, we're negative delta. That would be a plus for this trade. At some point in a pullback, if I think we might rebound quickly, maybe I would consider adding a long call in. But again, right now I'm not going to. Likewise, if the market were to start ripping up on us, maybe I got to chime in here and add in a long call. That may be an adjustment I would consider. So again, for right now, I am just going to put this trade on without the long call. And let's see, let me go in here. We're going to save the trade. And this is going to be a QQQ iron butterfly. This is going to be a new start to finish. And I'll put it's in the start to finish, and so we are going to enter this as a flat iron fly. In other words, this is not a broken wing fly, and adjust if needed. Looking for probably 10 to 15% profit on this trade would be a realistic, I think, expectation. So in the ideal world, what this trade does, I put this trade on, it just kind of sits there, chops back and forth, maybe chops slightly lower over the next week, week and a half, maybe even 2 weeks. At that point, I probably will have hit my profit and either be able to pull this thing off or at least start thinning it out. Rather than 10 flies, go ahead, reduce it down to, 8 flies, and then a few days later, reduce it a little more. And each time I reduce that, the left and right wings are creeping a little bit higher to where this could turn into a no-lose trade, where after those wings roll up a little bit, let me just hit the Save Trade button here and copy the link. So after those wings were to roll up a little bit, by thinning the butterflies out after we've had some decay, I can get both sides of this above the break-even point, above zero in some cases. So, but the market, of course, has to cooperate. So that's the game plan here, is putting on a flat fly, and then we may adjust it if needed. So take care, everyone.